All right, folks, and welcome to our investment case analysis on Zoom. We have here one of our student analysts and community leaders, Jeffy. This is meant to give you more access or insight into the type of analysis that we're doing here at Romero Mentoring within our analyst program, and also showcase what professional analysts on Wall Street are applying, the level of technicality, the deep research, doing valuation to give us a price target on the stock and ultimately determine if a stock is undervalued, overvalued, or fairly priced. So with that being said, hi Jeffy, how are you?
I'm good, Mr. Romero. Thank you for the introduction. My name is Jeffy. I'm a second-year student at Northeast University studying finance and fintech. I'm an analyst and a community leader at Romero Mentoring, and I'm excited to be here to share all this experience with everyone.
All right, great. So why don't we dive right into this? And before actually we dive into this, the way we're going to do it is we're going to go through some of the slides to really understand the story behind the company, what's the situation, what other analysts on Wall Street are thinking about the stock, what's their sentiment. And then we can dive a little bit more into the actual technicality, what's underneath the hood with the financial model, the cash flows projection, why is the stock down from all-time highs? And again, is it fairly valued? And is this a good opportunity to maybe buy the stock for other investors that are bullish on the outlook of Zoom? So we'll get to see that. So without further ado, let's dive right into the material. So let's go over here. And here we have in just general situation on the business that is basically summarizing their current conditions. So Jeffy, I guess the question that it's on everyone's mind is, what's the story with Zoom? What's been happening with the stock?
Yeah, so Zoom has been an incredible story this past year in 2020. The impact of COVID-19 with the shift to remote to work from home, learning from home, and pretty much everyone using Zoom as a platform for communication because of the COVID-19 pandemic has driven Zoom's financials and their stock price to go incredibly high. The revenue growth has grown over 300% year over year, as well as their margins have improved significantly with EBITDA growing over 2,000% and net income growing over 3,000% year over year. So with the projections, so the Wall Street projections, they are projecting a consistent revenue growth of over 20% year over year through 2026. And then you can see as the highlights, revenue growth has been phenomenal this past year, and they are projected to continue growing.
Mm-hmm. Now, one of the things I see here on your slide is that the stock has decreased approximately 45% from all-time highs. This all started in October, and it has been underperforming the overall market. Now, based on your research and your due diligence, what's the reason behind this, right? Because you might have investors that bought the stock near all-time highs and are now perhaps holding a stock that has declined. They might have a losing position on their portfolio. So any insights into why the stock is down 45% or so?
Yeah, so the stock reached its all-time high in October of last year, and a lot of that was because of the hype surrounding Zoom and kind of tech stocks going into the pandemic. A lot of these stocks have outperformed the market and kind of driven the S&P 500 and the NASDAQ. But ever since the recovery of COVID, a lot of investors have become skeptical with the growth of the stock, which is why it's decreased, 45% from its all-time high, as investors kind of bought in early and looked to cash out profits. So that's when it kind of started. And then moving on with the most recent events happening this year, the tech market sell-off and the sector rotations to more consumer-focused stocks, a lot of that has contributed to the overall decline of Zoom's price since its all-time high in October 2020.
Okay, so a couple of points I got out of that is the first one, definitely sector rotation. Okay, you also had perhaps their earnings report maybe in the last 2 quarters not meeting expectations, even though the company's growing top line revenue at a very high rate, double-digit numbers. And perhaps it's just maybe higher interest rates, right? High growth stocks being out of favor. And going into more cyclical names like energy, we spoke about this before, how energy and financials have been leading the market higher, also industrial stocks. So do you think, based on your valuation, and I see right here on the slide that you have a price target on the stock of $426, which represents 32% upside. What's your reasoning behind that? Why do you think that the stock should reach, or 426 is a reasonable price because you're bullish essentially, right?
Yeah.
You're suggesting that the stock is undervalued. So what's your investment thesis behind this?
Yeah, so a lot of my investment thesis is around how Zoom will continue to grow post-COVID, and I think they're in a really good position to continue dominating the market and kind of leading this recovery away from COVID. Um, I think a lot of in this past year, the work from home environment has shown businesses how important, how efficient Zoom and kind of video communication platforms can be, how much time it can save, how much money it can save just by having the convenience to open up your laptop and being able to connect with everyone worldwide. So I think even with the vaccination rollouts and the recovery from COVID, that will still become a new normal, even though it might not be as prevalent as this past year.
Okay.
So I think Zoom is, they're market leader in the industry. They are leading in the technology sectors. And I think that will propel the growth of Zoom, and then they will continue to lead and grow the market, further leading away from COVID.
Okay. Okay. And I see here from Wall Street analyst sentiment, the average Wall Street consensus price target is 466, while you have a 426 price target. Okay. Okay. Now, what about the upcoming quarter? Q1 fiscal year 2022 earnings will be catalyst. Okay. Is this the one that they're going to be announcing later? I believe is this month or next month?
Yeah, they're going to be announcing a Q1 report relatively soon, and a lot of that is expected to be well because a lot of businesses and schools are still using Zoom and work from home environment. So that will be a highly anticipated announcement. And then I believe that if earnings are positive and they do beat earning estimates, stock price will serve as a catalyst to grow and kind of rebound away from their dips in the recent times.
Okay. Okay. Now let's go here through some of your slides because I'm actually curious to see. Okay, so these are the three analysts that you were looking at from their research report. What stood out to you from what these three analysts were saying?
Yeah, so a lot of them have remained mixed signals. The Deutsche Bank has a price target of $360, whereas BTIG and Mizuho Securities both have relatively high price targets of $550. So if you go on to the next slide, we can kind of go more in depth into kind of what each bank says. So this is Deutsche Bank. They believe that Zoom will remain an integral part of the post-COVID world, given their leadership and the hybrid remote from work kind of environment that they are, which is why they do have a hold rating on here, primarily because of their ability to convert free users into paid users. But they are bullish and they remain confident in the fact that Zoom can hold a market leadership position and can continue to grow post-COVID.
Okay, let's see.
Deutsche Bank sentiment. And then BTIG, they are incredibly bullish on the stock with a price target of $550. Primarily, a lot of the thesis revolves around their opportunities to grow into international markets, particularly in Asia Pacific, where technology investments are at an all-time high. That's the fastest growing market. And then they believe that Zoom will have the ability to capitalize off that international markets and expand their revenue.
Okay, okay, and this is Mizuho.
Yeah, and finally, Mizuho, their final thesis is around the increased adoption of enterprises. As I mentioned before, big businesses, they've seen the convenience of Zoom and they've seen how much time and money it can save just by this video communication. So even though that, smaller businesses, they may transition to more in-person work and kind of away from Zoom, big businesses and enterprises, they will still continue adopting and using this video communication platform, which is why they remain incredibly bullish on the stock with a price target of $550.
Yeah, yeah. In real practice, that's how we've been able to communicate, right? Or even right now, we're using Zoom. So we're using that product to communicate, record the session, be able to deliver a message. And if we're able to do it this efficiently, now imagine how much more productive and efficient small business or mid-sized business with employees over 10 are able to perform and run their operations, right? It's what we've discussed in the past, that if we can communicate this way from the comfort of your home, be as productive, not maybe more productive, it just removes the office expense, right? And it creates more profits, it increases margins for the business, and we'll see how things would resume. I know some of the major banks on Wall Street are going to have their first year analysts come in, and then they're going to start to resume to have them be placed on site. But obviously, that's not going to be the case for everyone else. And I see the legacy that might be left behind, if you will, for what's going to be the next economy, right, over the next decade. And this is probably the first inning, right, of a decade-long play that is just disrupting many industries, even higher education. I mean, let's talk a little bit about that. How has your school semester been over the last 3 to 5 months?
Yeah. I've actually all my classes have been held on Zoom. We do have the option to be in person, but I've taken all my classes on Zoom, and it's been incredibly convenient and efficient. I feel like that I've still been able to keep up with a lot of my work despite having classes on Zoom, and it's extremely convenient. And for people all the way international. I was in Hong Kong last semester, and I was able to keep up with my school, and I didn't have to take a gap semester because Zoom was, so convenient, and it was very, very integrated within our systems.
Now, are you still in Hong Kong right now?
No, I came back to Boston earlier this year.
Okay, so you're in Boston. You did your semester out in Hong Kong, and I remember when you were first going through our program, you were doing it also from Hong Kong as well, right?
Yeah, I was also doing it in Hong Kong.
Okay, so this is just a perfect example of what's been happening with technology, where we can conduct business activity, education, interact, engage, and you can also learn through this form of communications, just using Zoom. So virtual education, virtual and remote working, it's here to stay. Now, of course, it's not going to replace being in person, right? Interacting with another human in person, it's something that it's obviously very important. We're social creatures. And as the economy continues to reopen, as we resume some sense of normality, you're still going to have businesses that are going to be operating like this, because now they come and realize that this is actually possible. And it took COVID, it took that virus to educate or it forced many businesses to change, right?
Yeah.
Okay, good. Now let's take a quick look here at their valuation. What did you find interesting when you were going through their valuation? Were the multiples too high? Were their price targets out of whack? Or do you think that this is reasonable?
Yeah, so Zoom, as you can see, they are trading at extremely high multiples. Mizuho Securities using a 3 to EV over revenue, with the company as a premium multiple of 43 EV revenue. They're obviously putting Zoom at extremely high growth valuation, extremely high tech sector, because largely due to a 300% revenue growth year over year. But given their 20% double digits revenue growth projected through 2026, the revenue multiples are still extremely high. But I think that is warranted because they are a leader in the technology. Their revenue growth has been extremely high. They are constantly investing in technology and having new products out. They've released multiple new products just this year already to combat with the growing needs of the community. So I think that price target is definitely reasonable for a high growth potential company like Zoom.
Okay, and I see it. Yeah, it's a pretty high multiple, but it's a high growth stock. Top line revenue growing over 25%, I think, for the next couple of years still. So do they deserve that multiple? Just from your research, do you think that's reasonable, that they deserve a sales multiple greater than 20, 25 times?
Yeah, I think it's definitely due because one, the margins are constantly increasing. The EBITDA margins, net income, profitability margins have, as they continue to scale, that's going to be a big thing. And also they are beginning to try and convert free users into paid users. So that's going to be a big milestone that they need to kind of anticipate. And then I believe they are working on it. So that's going to increase the revenue if they are able to kind of capitalize off those free users.
Okay. Now let me continue down here and see the model. Let's actually go to your model. And I know you put together a lot of slides here with good information, but let's see. Yeah, here it is. So here's the income statement, revenue, what you're projecting. Let's come over here. This is what I care more about. So the growth rate, so you're projecting that in 2022, revenue will grow 40%, then 20% the following year, then it picks up from there. Okay. Now, are your numbers based on your own case or, so it's based on the street case?
Yes.
There's the market, there's the bell. Okay, so I see that you're running. So this is basically Wall Street consensus numbers that you're running here.
Yes, that's true.
Okay. Now let me take a look here at the margins. And this is what you're talking about, EBITDA growth and EBITDA margin expanding. Wow.
Yeah.
Okay.
You can see that the margins are expected to improve through 2026 as they increase their customer base and they scale.
Okay, and now here I see earnings per share growth, 32 and so on. So the growth is there. I mean, the question just comes down to the multiple, right? Do they deserve that high of a multiple? Let's see here in terms of valuation, PE multiple 142, EBITDA multiple 128. It's pretty high, where the industry is around 22, and then on a PE basis 30, but then look at the sales. At the sales column, 12, 13, and these guys are at 33. But obviously, Zoom is perhaps growing much faster than everyone else in this peer group that you've selected. So maybe it's warranted and justified, right? Let's change this to the charts now. Now let's take a quick look at the charts and see what the charts are telling us. Okay, let's go back to a monthly time frame. Yeah, let's change this to a monthly instead. Yeah, so you see the nice run up last year. Here's the decline, and this is what people are questioning. Does this stock has another move to the upside, right? And one of the things that we discuss and share in one of our modules under our stock investing program is module number 3, alpha stock, right? We talk about breaking out on volume, better than expected earnings, double-digit revenue growth, specifically 25%. And you have the first wave, right? And then comes down, profit taking, maybe 1 or 2 poor quarters of decelerating growth, or just investors not being happy with the results. But is this right here setting the foundation? Is this setting the stage for another move to the upside on the backs of better than expected earnings? And of course, and if also we see a shift into technology, where you might start getting that sector rotation, where they're selling the best performing sector over the last 2 quarters, which has been energy and financials. Our money manager is going to liquidate some of those positions to pour money back into the underperforming high growth technology stocks like Zoom, for example. What do you think about that? Is that something that you've been thinking about while looking at the charts?
Yeah, of course. Like, I think that Zoom, particularly right now, is going through the consolidation phase. And as you mentioned, there's a sector rotation. But as those stocks have been performing very well, investors might be looking to take the profits off those and kind of invest into the high growth stocks, because they have been selling off in the past months. If you look at the volume for Zoom, if you scroll down a little bit, you can see that over the peak of it, where it was all-time high, there was immense volume trading volumes, and that's kind of has fallen down in the recent times. So if earnings do pick up and they are better than expected, we could see kind of an increase in institutional investors buying into the Zoom stocks, looking at the low valuations and riding the upside with increases in volumes.
Okay, now let's change this to the daily time frame, daily chart. And on the daily chart, we've plotted the 50-day moving average line, which is in gray, and the 200-day moving average line, which is in red. And you can see that the stock, it's bearish, right? It's below the 50 and the 200-day moving average line. So for the time being, I can see that many money managers, what they're probably thinking is, look, I'm not going to jump into this stock if it's below these moving averages. You may have algorithms, you may have trading systems that are set up as a function of trading or selling stocks underneath those 2 key moving average lines. So for example, if the stock price is below it, don't buy it. Just short, have the sell consensus on it, or the sell algorithm to be executing to just short the stock. If it breaks to the upside and comes back above these levels, and of course, the main catalyst that I'm anticipating is earnings. If earnings are better than expected, will it be the catalyst for new market participants to come in, accumulate shares for the next wave to the upside? And if we look at hindsight, and hindsight is always 20/20, but if we can look at history as a case study to pinpoint the variables that would allow us to anticipate another move to the upside, this is what I'm looking at, right? Here it is, things like this, right? Breaking out on earnings. Look at the uptick on volume, okay? You also got to see it down here when it first started to break out during COVID, the increase in volume. So are we gonna get something like that this time around when they report earnings? That's the million-dollar question, right? So from a technical standpoint, that's what I'm seeing. I'm seeing a lot of selling pressure on the stock. It definitely is approximately 45% down from its all-time high. But I think the main catalyst is going to be earnings. I think that's what a lot of investors are anticipating. And this thing is going to play out in one of two ways. Either it's just going to consolidate here and earnings might be worse than expected, and then that will be the catalyst to bring the stock lower. That will be scenario number one. Or are earnings better than expected? New buyers come in anticipating another move to the upside, and then the stock breaks to the upside. That's case number two. Which one of these two cases do you think is more likely to occur?
I think it's incredibly likely that, I think it is likely that earnings will beat estimates because with the vaccination rollouts and everything, people are expecting that Zoom to not perform as well. But, businesses and schools, they have been still using Zoom. They have been still using the subscription models, even though user bases, active customers may not be as high as previous year. Companies, they still need to pay those subscriptions, and they still need to take into the employees into account. So I think the revenues will still be consistent with the projections, and it could be even possible that it could be projections.
All right. Thank you. I guess we'll leave it here. But for the general public, this is the type of analysis that many professionals on Wall Street are doing, and we go much more deeper than this. We can do a revenue buildup to assess the potential size of the market, how many users, how many businesses are there, what's their market penetration, what are their margins. We can definitely run multiple scenarios on the business, an upside, a downside case, and then come up with different price targets. So there's a lot of technicality behind all of the analysis that we've just been discussing and presenting to you in the presentation. And one of our mission here is to educate the public and educate students that are going to be the next generation of analysts and investment professionals on Wall Street, but we want to make it transparent. We want to share the knowledge to elevate and raise the level of understanding of the public. And now you guys understand a little bit more of what many of these analysts are doing behind closed doors on Wall Street. And of course, it's a lot more technical than what we're doing it here. We're simplifying it for everyone else. But I think this is insightful. I hope you found value in this. And of course, this is not an investment recommendation. This is us doing our homework and presenting it to you. Do your own homework. Be responsible when it comes to making your own decisions as well. So with that being said, Jeffy, I want to thank you. Any final comments or thoughts?
Yeah, thank you, Mr. Romero, for having me. I hope this has been a helpful and interesting experience for everyone out there to see what college students like me are capable of through the Romero program. So thank you, Mr. Romero, for giving me this opportunity and for helping me along the way.
All right, buddy, you're very welcome. So with that being said, we'll end the session here, and we'll see you in the next one. Take care. Bye-bye.